Hey guys, welcome back to Ask Me How I Know. Today I have John with me, and he is a fellow podcaster, fellow multi-family investor, and extraordinary. I am so grateful to have you on the show today.
Thank you for having me, and those are very, very kind words. Thank you.
I only speak truth. It's one of my problems. You know, I can only speak truth.
Thank you. I'll take it. I'll take it.
Yeah, it works. It works really
Appreciate it.
well. So I just have to go here for a quick second, if you don't mind. I ask a lot of kind of peculiar questions. But you said, if you don't mind, you said you weren't going to wear jeans after 40. Like, really? We might edit this out. I don't know.
No. Go ahead. It's awesome. Keep it. Keep it. So,
I absolutely love that you said that. And I'm like, I've got to call you on this. This is so fantastic.
so a couple years ago, when I was 38 years old, I'll be 40 this year. I turned to my wife. I said, "I'm not gonna wear jeans when I'm 40." And she said, "Why?" I was like, "Because it's part of my growth. It's part of something that I'm putting out there, right? So I put things
Right.
out there, and hopefully it transitions to other things. So jeans sometimes are uncomfortable to me. It's just um, it, I'm either really, really hot or I'm really, really cold. It's almost like I'm never really neutral and comfortable enough to wear jeans. So I wear almost like golf pants and khakis most of the time because they're comfortable. Khakis, if more in the winter and stuff like that, because it's a little bit heavier and denser. And then the golf pants and shorts type material when it's the summertime. It's kind of cool. Everybody thinks I golf and I don't, but I'm gonna learn one day, right? So
You
it's
make
kind
it
of some,
up.
yeah. I'm gonna learn. Me and my wife we were gonna take lessons this year, but this
But
happened.
COVID.
COVID happened. Yeah. So X that till next year. But anyways, it's always been our plan to live in warmer climate, and that's been if I'm going to live in warmer climate, I don't need jeans anymore. So it's kind of something that I put out there and let it manifest and then let it go from there. So I'll speak on it as far as that extent, but at 40, no more jeans, and I turned 40 this year.
I love that. Hey, 40s are like fantastic. I will just tell you that. I'm hard into my 40s, and I think they're like the best decade. Now, if you ask me about every decade, I always think every decade is great.
Of
So
course, it's the one you're living in.
exactly. Hey, you're still alive. It's a great decade.
That's it. But Julie, before we get started, thank you for having me on the show. And if you haven't already, please rate and subscribe to Julie's podcast. As a podcaster, one podcaster to another, it means a lot to us getting rating and reviews to be able to find the guests that are unique for the show. And sometimes that's all it takes is the rating review. So please, I encourage you, rate and review Julie's show.
Aw, thanks so much, John. Yeah, they really do make a huge difference. I wanted to talk about that. Really struck me about the whole "I'm not going to wear jeans" is actually not the whole jeans things, but I love how you are taking this action. And a lot of times I hear people saying like, "Oh, you got to take massive action. You've got to do these big things." And yet we kind of neglect some of the little things that lay a foundation. So already I was noticing, already you're laying this mental track of, I'll take these things out of my wardrobe because this is where I want to go. And I think that's phenomenal. I'm super impressed with that.
Well, you said the key word for foundation, right? So a couple years, like when I started my real estate journey, I met with the financial advisor, and it wasn't particular real estate financial advisor. It was just like during my process of my journey of learning the financial game, how to work with money, how to learn to speak the language of money is what I like to call it. How do I go through that process? And obviously, at that point, his firm was a little bit too big. He was like, look, go build your foundation. You build your foundation by paying off your bills, savings, this, then come back and we can have a conversation.
Right.
And he gave me a lot of tools as far as how to go and achieve that. And I worked that plan. So I built my foundation. And then instead of going back, I realized real estate was part of my journey. So with that said, is whenever I'm planning something or creating a mindset or manifesting something or affirming something, I build my foundation. What's that look like? I start with basically the end in mind. So I built my avatar for who I was in my future self. And then I said, this is what my future self looks like. This is what my future self wears. This is what my future self lives. And this is what my future self thinks and does. So obviously, my future self, I'm older. What do I want to do? I want to be comfortable where I'm going to live. I like nice weather. I want to live somewhere warm. So I'm going to build my avatar to look like who I want to be in that person. And that person didn't have genes in my life, my long-term vision. So that's how I kind of reverse engineer that. And I reverse engineer everything from as best as I can with the information I have now. So what's that look like? I build that picture in my head, and then I start and I say, all right, I got to eliminate genes at some point. I'll do it when I'm 40. That sounds like a good number. Let's do it. Boom. And I put it out there. And that was 2 years ago.
Oh, that's really
Geez.
interesting. I see here. I don't know. I'm like, I know it's a funny question to put you on the spot with, but there's so much more beneath what
Yeah.
the genes thing, and that is like the whole like whoa, magical gem, and that's what people looking ahead and saying, what do I really want in life? Planning it out, reverse engineering it, so crucial.
I
And you're
mean, go ahead.
oh, you go.
Well, the reverse engineering thing, uh, basically, think about how every invention starts or every business starts. You have this envision of being great, awesome, having a great product, and you want it to work. I mean, uh, and not malfunction, but function the way you want it to function. So how do you do that? You have this idea in your head of it does this, does that, does this, does that, and boom. Well, my business is this, boom. So if I can take that and say, how do I get there in a probably in a span of 5 years, 3 years, 1 year? How's that break that down into each, you know, if it's gonna take me 5 years to get there, how's it gonna look like when I'm 3 years in? How's it gonna look year by year? And if I can break that down like that, even if I don't achieve that 5 year mark, I still am on the path to improve. And if I'm chipping away at it daily, what's that daily operation look like? If you go all the way back to daily, and I'm not as redundant to go hourly or minutes. I do time block, but I do have goals for my week, right? So yeah, I guess that's how I do it, but it's different for everyone. And just because I do it that way, it might not work for you, Julie. It might not work for him or her, but having some sort of a plan definitely is going to work for you.
I think having no plan at all is a recipe that doesn't come out very well. And I do look at it as I do a lot of baking, and I look at it as a recipe and use that analogy with my kids. Like, hey, if we don't follow the directions, we have to have the directions, and we have to have the right ingredients. And if we're not laying the foundation, if we're not getting the right ingredients, we can't have that recipe come to fulfillment. Like, really does. Baking
I,
is part of life.
absolutely. I actually, even for instance, having a coach means, for instance, it's very helpful. Even if the same process of the coach is not going to work for you, or you tweak what they did, which basically guides you in the right direction, even if you don't follow everything they say in the terms of it's not going to work for me because it doesn't align with you, but it's going to give you guided direction to implement certain things into your practice. So
Yeah.
having a coach, a mentor, I mean, sports teams can't win without a manager or a coach, right? They don't have that. All right, what do we do on this? This inning. What are we gonna do at this timeout? What play are we gonna run now? You need direction from the top, and sometimes, as a player, you can ad lib and change something that you see on the fly. But having a coach's perspective allows us to really, really hone who we're gonna be as a player.
It does, and it's hard to ad lib if you haven't showed up to practice, if you haven't listened to your coach, then you're just working with raw material that hasn't been like kneaded. Going back to baking, I mean, that coach is there to knead and to kind of shape it and everything, and just show up to the game and be a little flabby.
Yeah, I completely agree. My son's into basketball right now, and one of the things I always say is no one ever woke up and said, "Oh man, I was the number one draft pick today because I didn't do any work." No one ever did that. They always look back at draft day and cry and say, "That was hard work. I did it. I can't believe we did it, mom, dad." And it's pretty gratifying for them at that point. But no one ever literally woke up and was drafted number one. It just doesn't happen that way. They put in a lot of sweat and tears.
A whole lot. Yeah. You're putting in a whole lot of sweat and tears right now on some development of a fund, it seems.
Yeah,
Can you
the
share
the
about
fund
that?
of fun concept, it literally came to me as, what if there was a way for me to be able to do this? Basically, it came to me and said, like, I thought of it this way, I reverse engineered it. If
Of
I
course.
had a fund of fun to invest in, I wouldn't be doing what I'm doing now because I would have invested in that fund of fun. The reason why is it takes everything out of what I'm doing now, or the old school way of doing things, or one off deals. Not old, I shouldn't say old school way of doing it, but the current way of doing things, which is I come across a deal, I analyze it, I go ahead and I invest in it. But also, if there's multiple deals, I'm having a hard time picking which sponsors to invest in. Also, if I only have 50,000, and what if the minimum entry of that deal is 100,000, and I really like that deal better than the 50,000 deal? How would I be able to get into the deals? A fund and fund would take care of all those because if I invested in a $5 million fund and that fund was going to diversify and invest in other syndications, not necessarily the investor's personal portfolio, or not personal portfolio, that sounds bad, but personal investments that they come across, it
Right.
diversifies it through, for instance, you can be in in an opportunity in Texas, Memphis, not Memphis. Let's say Texas, Tennessee, Florida, and Carolinas. If that fund is going to diversify in multifamily assets all throughout the southern
Built.
United States in landlord-friendly towns or states, guess what?
Mhm.
You're diversifying. You were going to do that anyways because
Yep.
you're going to take your 50,000 or 100,000 and spread it out into maybe two or three investments with a 50,000 here, 225s there. Yeah, you're going to do it anyways. But a fund allows you to eliminate all that because now you don't have to sit down, go through the webinar, go through the process, go through the analyzation of the underwriting. It's stuff that I'm already doing. So I said, if I had that structure, would it be easier for other investors? And what kind of investors are looking for that? Typically, it's 401k, self directed IRAs, because if you're going to do that every 5 years, might as well put it in a 10-year fund because you don't need it right now. You're building it up for later, anyways, and let the fund go and produce for you. Because if you're moving it to a self directed IRA, that was another thing I thought about. I said, when I had a self directed IRA, I needed to manage it. I was directing it. Yeah, I had control. Great, awesome. But what if I only needed to do it once? Great, that was awesome. But there's none of those options right now. Usually, when you invest in a fund of funds, you're investing with the company, and they're going ahead and they're going to buy a bunch of assets, and then you know over time, that's it. There's no real difference. But now, if the fund that's going to go and invest in Julie's deal here, Chris's deal there, James's deal there, it's diversifying almost instantly once it's raised instead of on maybe each time they come across a deal, it's called down. But you still practice the call down practice as well too. So it depends on how often you're coming across deals. But I'm always looking to try to invest and move my capital. And my personal goal, Julie, I don't know about yours, is I'm trying to beat inflation 1% at a 1% at a time. I'm not trying to cloud my judgment with other things. I'm looking for singles and doubles. I'm not looking for home runs because I want to hit for average with my capital. I want a
Yep.
steady stream of pretty safe as it can be investments, and that's what works for me.
That's how we are as well. Like it it doesn't have to be I just won the lottery. It needs to be something that's I can depend on and it's going to be stable and perform correctly, to my expectations for sure. When you're thinking about this fund to fund, and as you're talking about it, and I'm thinking about that person that has that self-directed IRA, or they have some other investment vehicle where it's like they're in charge. I think that there are people out there, those passive investors, well intended, and they're like, okay, I'm gonna go out and invest my money, and then they come to that stopping spot, like, oh, wait, how do I even do this? you know, and so this type of fund to fund bridges that gap for those people that I want to invest in a different way. I want to have some level of control. Like I want to know what's going on and what I'm investing in. But um, are there other elements to that when you're thinking about that particular? I mean, that's one of the avatars that I see with that. But who is your actual avatar? Maybe I should ask you specifically, like
Well, it's the
your
busy
fund to fund.
professional. Yeah, that's a great question.
Yeah,
It's the busy working professional where they're, for instance, a passive investor could be a doctor, lawyer, a business entrepreneur, and they're providing a service to the world that the world truly needs.
yeah,
And why take away from your abilities to go ahead and supply the world with what you're good at, whether it's your entrepreneurial business or you're a doctor or you're a lawyer, whatever you do as a profession, and you're providing a service to the world. And now you've already landed on real estate and you've thought about it and you're saying, I've always wanted to invest in real estate, just don't want to deal with the tenants and everything else. I'm too busy, and all the remaining time I have in my world, I want to allocate to my family or vacations or friends or whatever you want to do in your personal downtime. That's the avatar. That's the person that is ideal for these, because they know that they want to diversify through what real estate, and they just don't want to own it. Maybe they have and they've had a bad experience. The best thing is leverage a professional's experience and go ahead by that. So for instance, Julie, you're starting your journey, you're learning and you're doing everything, and all of a sudden now people are coming to you, Julie, how'd you do it? How'd you invest and make a profit on this? And what kind of returns you get? And now you're showing them on paper what your returns look like. And now they say,
right.
hey, let me know next time you come across that.
Yeah,
Right? Because I don't want to do it. You're the professional. Go do it for us.
right.
And let's say you had one of these funds of funds, and if their long-term view is similar to yours and it lines with the criteria, and now you're able to go ahead and already do what you're doing and
Yeah,
being able to invest that capital. So that's basically the reason why I started it, is because there's a lot of professionals that are really good at doing what they're doing. So why do they want to create another job? Even if it is a side hustle. I mean, sometimes sometimes they do like that. They do like the fact that they have to peer through the you know the PPMs, the operating agreements, and the webinars, and sitting through that. Maybe they like to do that. That's fine. That's great. And they can continue to do that on one-off deals. But what if there was a way to do it once and invest in a fund of funds? And that's how I came across this, because it just solved a lot of problems with people that were investing with, for instance, self-directed IRAs, solo Ks, QRPs, EQRPs, and maybe they just wanted to do it once, because the minimum investment on not the minimum investment, the minimum rollover, the average rollover of a self-directed or EQRP through my interviews on my show has been about 100, 125 average, right? Let's
so
just
you can
take,
get into one to two deals, two deals at 50K each, or one deal at 100K, and you're
yeah. Now let's play that out, right? Let's play
yeah,
that out. You have 500,000 in your 401k, and you're rolling over 100,000 just to dabble into the real estate world. 100,000, cool. 100,000 will allow you to invest in 2 to possibly 3 deals, one at 50 and two at 25. Let's say you're that diversified. Great. 3 deals. It took you time to review all those deals. You had to sit through all those, exactly what I just explained, the process of
Right.
the
And
underwriting.
probably sat through more than three because you're not going to jive with
Yeah,
every one of
let's say for the
them.
sake of the argument, you sat through 3 and you liked those 3. They magically fit all your criteria. Boom. Hit every checkbox, right? And just to give you an idea, not every deal is going to fit all your check boxes. What they're going to do
Yeah.
is they're going to hit most of your check boxes, and then you make the decision.
Yeah.
So if you have 10 items on your checkbox list and it hits 6, either yes or no, final decisions on you. And sometimes just understand that not everything's going to be 10 for 10. If it
Yeah.
is, awesome, whatever, that's great. But let's just say 10 for 10, 3 deals, boom, you did it. You had to sit through those process 3 times. But what if there was a process you could do once with the fund to fund, and then you can just give the whole 100,000, knowing you'll be in 4 to 5 different deals. Now you don't get to handpick the deals, but the sponsor of that fund is going to do that on your behalf. You already are used to this practice. If you are participating in a hedge fund, that's what they do. They go and invest it in other deals and other funds,
Yeah.
and that's basically how you come about that, and basically make it easier for you. So now you're vetting the sponsor once, but the sponsor is now going to give you a newsletter of how all the deals are basically performing. Now, let's just say you guessed wrong on all the deals you invested in. Maybe you didn't vet the sponsor properly. The fund of funds, the sponsor already has relationships with proven operators. So that's the benefit of that. There's a lot of other benefits as well, but you have to eventually make the decision to be able to, you have to basically make the decision to be able to invest in those opportunities. And you have to go with your confidence. So you have to have investor confidence. You have to prepare and explore due diligently. You have to network with sponsors. So that's the 3 things that you have to really come down to help you start investing passively.
I love it. I love the fund to fund because I believe it preserves what most investors are looking for, and that is, I want my money working, and I want my time. I want my money growing, and I want to go do the things that I love. I already work hard all the time, and I have limited. I just read we have 80 hours. So I don't know if you saw that. Somebody posted it on LinkedIn. Maybe it was you. It's like,
I haven't been on there today yet. Not
okay,
yet.
you have 80, believe it or not, apparently after your work week and different things, you actually end up with like 80 hours to use in your time or something like that. I'm like, wow. But
Through the work week, man. That's still
yeah,
not enough.
well, through the all 7 days, but all that to say, like, how do you want to allocate your time? And so this is a ginormous solution for investors that really want to maximize their time and say, wow, my kids are young once, or wow, I really want to travel and I don't want to have to go and vet this deal constantly. And I mean, passive investors still have to do their level of due diligence, and like you're saying, sitting through the webinars, and it's all a process. Did you want another job?
Yeah, and that's another thing too is let's just say that you're investing in all those operators, and maybe they don't even have an investor portal. Now you have to track them on your own with your own spreadsheets, and that is a bit a daunting task as well. So, but at the same time, now a lot of sponsors have their own private secure investor portal where it's
Yeah.
almost like signing into a brokerage account. Now you can go ahead and monitor your investments, and it makes it easier to be able to say this deal is producing that way, that deal is producing that way, that deal is producing that way, and this fund might be producing this way. And you have everything centralized in one place, and it makes it easier for documents such as K1s and everything. But it's just easier practice now, thank you to technology, as opposed to how it was back in the day. If you were to invest like this, you were going to keep everything in a spreadsheet. because you wanted to see and track it against this investment to that investment, that investment. And not to say you can't do that still, but it's easier to monitor having all your deals in one place when you're investing with one particular sponsor than in, you know, uh, spreadsheet.
How many logins do I want to have, and how many spreadsheets do I want
I
to?
here's the thing. I don't think people mind having logins as opposed to having to create a spreadsheet, because a spreadsheet right there alone is like
Oh
the
gosh.
calculations is, unless you're hiring that out, hey, make me a spreadsheet.
Yeah, a little VA for that. It's funny. I always tell my kids one of my life practices this year has been just let's just push simple in life. Like there is a easy button, like this is the easy button that people can push for. Okay, I can make my life simplified, and I think life gets so complicated. It's nice to have, solutions that work for people like this. I do have a question. What are you intending to do with, so let's just say you have an asset that you've acquired through the fund and it's performed. Maybe it was a 3 to 5 year hold, but it's a 10-year fund and that asset is sold. Are you putting that money right back into the fund? The proceeds from the
Well,
distributions?
each fund will not have. That's a great question. Each fund will not roll forward.
Okay.
So, which means was recycle the capital, right? So we will not.
Mhm.
So, for
That's
instance,
what.
yeah, if we're invested in 5 deals and 2 of them mature and come to exit, awesome. What do? We treat it like a capital event and give the investors back their capital. And now they're still in that fund with the remaining. For instance, let's say they invested 100,000 and 2 deals uh, made them their 25,000 back plus some. So now that they're only really in the fund for remaining 50 grand. So now they'll be producing off of the 50 grand. We'll treat it like a capital event, similar to when you invest in a syndication and there's a refinance, right? Treat it like that. Treat it as similar to that. You give them back, and if they have any desires to go ahead and participate in another fund, if it's open, then that's it. That's the process. So you explained a question where I am having conversation with other operators about that, and they asked me the same thing. How do you treat it? I was like, wouldn't you treat it similar to a capital event? Why not? You're not going to be in the fund for the whole 100,000 if that was the case. If I already gave you back 50, so you treat it similar to a capital event. So that's a great question, and that's what got a lot of people tripped up. A lot of people trying to think about it as far as, what would I do from that practice?
Yeah.
But also there's a call down practice as well when you're getting in started in the fund. So maybe the fund is for $5 million, but we're only looking at 2 particular deals right now. And you want to invest, let's say 100,000, just to make the numbers easier.
Sure.
At the start, we might call for only 25,000 remaining, but you have allocated the rest, the 75,000. So only 25% on the call once you commit, but you know that you have the remaining 75,000 that could be called down when other opportunities come about for us to go. So the reason why is we don't want funds sitting into the account as far as unallocated. So as we're reviewing and say we're close to having this, close to having that, close to having that, we'll have a call down process. So another 20,000, another 25% can come down right now. And then that's when you'll wire those. But you already committed 100 grand. So you know that capital is already allocated for that fund. So
Right.
you'll, at first, when you sign the PPM, you send that first 25. And then if there's 3 more capital calls coming down, then we'll do it in that 25 stack structure. So if that makes sense to you, that's kind of how it will be called down, instead of you sending, once you sign the papers, sending the whole 100,000 down.
Which is different if you're participating in a syndication, one shot wonder type situation. It's all your money right there. You're done. That's interesting, and I did not know that. Now, can that be done in different ways, or is there a protocol for that?
Well, for instance, if we have a $5 million fund and we already have we know that we're gonna be sending $1 million to this deal, right?
Yeah.
why would you want the remaining $4 million sitting basically dead in the account,
Not
right?
working.
Yeah, so let the investors hold on to it, knowing that there's other opportunities coming, and then it's a call down structure. So
Okay. Seems like it would reduce. I like to keep things simple, as I just said earlier. Like, hey, my liability, just everybody's liability is maybe more within their comfort zone, perhaps. I'm not sure.
yeah, it just makes
But
it simple as far as you're only wiring money when it's called.
yeah,
So with for instance, there's the investor portal that we use now. We're able to wire through there as well. So it's just setting up your account to it, and then you can assign it. Hey, we need another 25. Boom. Now you can go. You can do it
nice.
everything from there without having to go ahead into the banks these days.
It's pretty amazing, isn't it?
Man, anything to save me a trip, I'll tell you that.
I know, it's wild. I really appreciate you taking the time to explain the fund to fund, because I can tell that there are more of these coming about. Like, it just seems that it's, the whispers. It's a whisper I've heard of, people talking about maybe starting one, or do you know about these? Trying to get information. So it's really helpful. And what I love about it is that it just, like you've said, it solves that problem for so many people. Like, I want to participate. I don't want to learn everything. I just want my money working. It solves like a myriad of problems for people. So I love it. I can't
Absolutely.
wait to see like your fund just flourish.
I mean, it's in the infant stages now. I'm working with SEC attorneys to make sure the size of the fund. I want to make sure it's you know it. I use the $5 million as a rough like just to throw it out there to break it down into one
Right.
million dollar chunks as far as explaining. But it could be as small as $2 million. It could be $1 million. But I think I haven't really nailed down that as far as because I haven't had enough conversations with my attorneys yet. And also I know that there's an appetite for investors with it. It's out there. A lot of
Yeah.
investors want to invest, but want to do it. For instance, for me, I want it working. I want my capital working for me. I want it out there, but sometimes I don't want to um, just constantly have to look over deals and stuff like that. And this is me now thinking back that if I knew all of this now, back then I would have did that,
Right.
right? But as far as me, I would have did that, and I would have stuck to just my IT job and basketball refereeing, and that's all I do. I love it, right? So, but now I love the fact that I'm investing in real estate. Once I caught the bug, I said I gotta quickly scale, not quickly scale, but quickly learn the business. And I learned the
Yeah.
business, and now it's funny that I'm doing this today. It's just different now. It's a
It
different life that I had envisioned before. I thought I was just gonna referee in IT and just invest in maybe single family homes. But then once I got into the multifamily game, it exploded.
Multifamily is such a game changer. Like, it's a switch.
It is. It is.
Comparatively speaking. So let me ask you this, going back to a little bit of mindset, and you think about being, back in your IT world, and, and refing, you're back in time. Did you have the same mindset of reverse engineering and going back and being a little calculated?
Yes and no, not to the point that I do a lot of my reverse engineering now. I just did it on a minimum scale. Like I envisioned what it looked like, and I never kind of sat down and mapped it out. Now I map it out. Vision boards and all of that, journaling, affirmation journaling, all of that. That's how I do it now. But back then, I had uh, paralysis by analysis. So I was trying to learn stock market. I was trying to learn um, how to invest in the market where because I already had capital there, right? So basically in the stock market, if someone, if I like to use this terminology, if Coca-Cola appointed a CEO and everybody in the industry knew the CEO and they're like, oh my gosh, they're a dud, their stock would go down,
Right.
right?
Yeah.
Now that tells me one thing: people invest in people. They don't invest so much in the product. They invest in how that person's going to take the direction of the company. Now, if the person that they announced was phenomenal and awesome or whatever, man, they transitioned that company to this, man, what are they going to do for Coca-Cola? And the stock price goes up.
Right.
Like, think about it. Yeah, Coca-Cola is the actual product, but it's the person driving it. And they can either bring it down or up. So you, I took that once I learned that and it clicked about real estate. That's why people invest in operators that are proven and really know what they're doing. And it just kind of like it hit for some reason. It clicked,
Yeah.
right? I didn't get it at the time, but now I understood real estate a little bit because I saw how appreciation works by the value of my own home. We bought a foreclosed home and then we renovated the hell out of it. And now it's, you know, fitted to our liking, right? And
Right.
just because we did that, now the value is there. So I saw how that worked, and then I said, "Man, imagine this on a multifamily level." And then all of a sudden, as I was closing on my first single family property, everything I was consuming at that time was multifamily, multifamily, multifamily. So I turned to my wife. I said, "This is the last single family we ever do, first and last." And that was it.
Do you still have it?
Yeah, we do. And it was so funny is I have a target dollar amount that once the value hits,
You like
I'm gonna
done?
divest out of it and go buy multifamilies.
Right. It's funny how that works. Just again, pushing simple in life. Well, I just think I was wondering as I about the mindset shift because there's such a unlike a lot of other investment niches, the multifamily world is kind of unanimously focused on mindset and approaches. And I know that I've grown tremendously, since entering into multifamily, just through the mindset. It's already something I enjoyed and I was already going that way, but it's definitely helped that flourish. And I think, man, if I would have had some of this, a couple decades ago,
Yeah,
that'd be
yeah.
some serious secret sauce.
I completely agree. And it's not just so much the multifamily landscape, it's even small residential brokerage. I think that's kind of where it started with Keller Williams and all of them because of the
Oh,
fact that you read his books and you see how that's angled towards mindset and focus, the one thing and all of that, right? So um yeah, just even my buddy owns a brokerage around here and they do a lot of events where they help their sales reps, right? They're little agents, they're real estate agents. So it's all mindset things. It's all empowering and providing the training and the guidance, really.
seriously. If you could, I know we should probably bring it to a close, but so I suppose as a parting ish question, like if you could say, wow, if I had this one thing back when you're at that point where you're like dabbling into that whole, I'm going to work on stocks, I'm going to do that, if you went back in time, what would you tell yourself?
If I had the investor confidence to recognize what I knew. So what I knew was real estate paid me five ways, right?
Yep.
Appreciation, cash flow, loan pay down, tax benefits, inflation hedge, right? So the same way inflation eats at your savings account, it eats at the the mortgage bank note on that apartment complex, right?
Yep.
And guess who's paying that? The tenants. So that's the benefit of that. So if you're getting interest only for 2 years, that's a benefit because inflation historically goes up by 2% a year, right? That's why my mindset is I'm trying to beat inflation by 1% at a time. So I don't care what if my return is personally, I'm trying to, in 5 years, if I break even, I still beat inflation or I tied inflation. Who cares? I get another opportunity to go and beat inflation.
Yeah.
So that's how I see it. And that's kind of my wealth preservation mode. And anything over that is going to grow my wealth. So that's how I see it. That's how I view it. I don't look at terms as I need this X amount of IRR, I need this percent cash on cash return. I say, am I going to beat inflation? And everything else is gravy after that. That's just the way I think and the way I see things. I'm
Yeah.
not sitting there trying to, I need, if it doesn't give me 8% cash on cash, I'm not, uh, to each person is there's their own preference. I get it. They say that they can go and do this in the stock market and do that against this and get this and whatever. If you can do it,
Yeah.
I'm not gonna argue with you. I'm just gonna do it.
Yeah.
You know, show me afterwards. I'd love to see it. But I know what I know, and it's investor confidence. I understand those 5 principles. I understand I get paid 5 ways, and it works for me. So that's what I would tell myself.
Oh, I love that investor confidence. That's the first time that I have heard that one, and I think that's absolutely powerful. I think a lot of people lack that confidence in, especially if they're new to something, or it's like, no, you're okay. You're fine. Keep going. Be confident. It's going to
Yeah, I
work
mean,
out
we
really
get
well.
we have plenty of opportunities to doubt ourselves. It's just we got to refocus and recalibrate our mindset, our position on things, and just trust ourselves.
Yeah, definitely. John, thank you so much. I appreciate your time. I appreciate you just walking us through fund to funds, and in walking us through your genes with reverse engineering and having a having a forward future looking mindset. So, and I think especially now, in this awkward time that the world is in, it's more important than ever to be looking to future. I call it future self. I always, and I ask my son, like my kids, I ask people that. I'm like, well, what would your future self say? Like, what would future self at 50 or 70, or with my kids, what would 16-year-old self say about that?
That's absolutely true. That's one of the things I say sometimes when I'm writing my journey. I say, what would my future self thank me for today? And one of the things I do, and it's a cool exercise. Every year on my birthday, like a week before my birthday, I write a letter to myself of what it would look like 5 years into from myself 5 years into the future. And even though I write it a week before, on my birthday, I read it. And I said, wow, I wrote that a week ago. And sometimes it's like, I remember writing it, but when you read it, it comes off differently from, man, I wrote this. All right, that's what my future self looks like or sounds like or is telling me to do. Let me go and keep going. So I do it on my birthday a week before, and then I read it on my birthday.
That's really super cool. I think I might adopt this practice.
I've done it for the last 2 years. Yeah.
That's really cool. Man, seriously going to do this. John, how would you like people to connect with you?
Easiest way is johnfortes.com, JOHNFORTES. Also, there's the Passive Investor Show on iTunes. You can also go to passiveinvestorshow.com. And I'm all over social media, but my website will link you to all of that. And thank you for the opportunity. Really grateful.
Oh, I appreciate having you here. And I highly encourage everybody to be sure to check out his website, because I always say, who you invest with, it's going to make a difference. Because as John said, like, you're investing with a person, and you don't always click with people, and you're just as people, and you don't always click with their philosophy. And so, when I have a guest, I always tell people this, John, I'm like, if you click with this person, definitely go to their website, check out their offerings, because that's who you probably should invest with. Also, I have enjoyed your podcast tremendously. And I can't wait till the gym reopens and I can get more time listening to podcasts because that was like my prime time on the drive there and working out and then on the way back. So anyway, definitely check out John's show. No matter where you're at in your investment journey, his show is going to just be one more tool in your toolbox, and it's really fun to listen to. So
I'm grateful for you. Thank you for saying that. You didn't have to. You're so kind.
I didn't have to, but you've earned it. You do all the work. I'm like, gosh, it's easy to speak kind words about people doing great things. So thank you.
Thank you. You're the best, Julie.
All right. Have a great day.
You too. God bless.